The collapse of the Chinese company Evergrande is the talk of the town that is the global economy. What implications does this have for the crypto market? What does this mean for XRP? Stay tuned till the end and find out. Also, make sure to keep on watching because today is the day we will reveal the lucky winner of our giveaway. And maybe it is you. Welcome XRP Army. Let us grow the XRP Lab community by pressing the like button and subscribing to our channel. After the recent flash crash, the crypto market is now recovering slowly. The market, however, remains largely bearish. The Bearable Bull, a popular crypto analyst on YouTube, uploaded a video that presents an intimidating observation: a drastic crypto collapse is incoming. The risk is that the collapse of Evergrande, a Chinese real estate company, could set off a chain reaction that affects the whole of the global economy. Evergrande is neck deep in debt, a debt of $300 billion. The company is a real estate giant with an income of $110 billion in sales in the previous year and has more than 1,300 projects. Wall Street appears to be keeping close tabs on this situation. The interesting thing is that no major investors think that Evergrande's collapse will affect US markets or the domestic economy. These investors are hiding behind the argument that the Chinese government would use their vast control over the Chinese economy to lessen the impact. And so far, there is no evidence that its effects are bleeding into global markets. Mark Zandi, chief economist at Moody's Analytics, stated his observation in the following way: "I don't think the Evergrande meltdown, and the financial problems of Chinese property companies more broadly, will reverberate back on the US economy or markets." Simon McAdam, senior global economist at Capital Economics, claims that even a huge collapse of Evergrande would have little global impact beyond some market turbulence. David Kotok, co-founder and chief investment officer of Cumberland Advisors, dismissed the issue of Evergrande as a Chinese domestic credit problem. Other than damage to the market, the fall of Evergrande could affect China's economy. China is the second largest economy in the world after the United States. For that reason, any major disturbance within the Chinese economy is going to send waves of turbulence across the globe. Wall Street's casual treatment of this situation is something to be noted. They claim that since China's authoritarian government has enormous influence over what happens in their economy, financial markets and banking system, this issue would be handled by them internally. Take a look at another recent incident in the world of finance. The top officials of the US Federal Reserve recently gathered a lot of flack for their personal dealings in the stock market. Many media reports have popped up this week that report the active dabbling of two of the Federal Reserve's 12 regional bank presidents in stock trading. The Federal Reserve has always remained on the top of their game due to its credibility as an authority. But now everyone is questioning the rules that allowed these officials to carry out trading in the first place. This is an excerpt from the code of conduct that Fed officials have to follow. An employee should avoid any situation that might give rise to an actual conflict of interest or even the appearance of a conflict of interest. Those with access to market-moving information should avoid engaging in any financial transaction the timing of which could create the appearance of acting on inside information concerning Federal Reserve deliberations and actions. The Wall Street Journal and Bloomberg reported earlier this week that Dallas Fed President Robert Kaplan and Boston Fed President Eric Rosengren made frequent stock trades in 2020. This financial year has been a tough one due to the coronavirus pandemic. During this time, top officials of a government regulatory body engaged in trades that could impact the market in a way that the stocks they invest in are favored, at least minimally. Big players in finance are presenting themselves to be nonchalant about this troubling situation. This in itself is something to be wary of. As the bearish bull predicts in his video, it is clear that a stock market crash is deliberately being crafted. Apart from all this, the crypto market has its own set of hurdles to deal with. Gary Gensler, the SEC chairman, made clear his stance on cryptocurrency in front of the Congress. In the guise of investor protection, the SEC and its sibling agency, the CFTC, along with the Federal Reserve, and other members of the government's financial bodies are launching active investigations on different avenues of the crypto market. Now it is time to reveal who is the lucky winner of our giveaway. And the winner is Sarah Peters. Congratulations, Sarah. XRP Army. Let's all congratulate Sarah in the comment section below. And now let's get back to the video. What the SEC wants to do is regulate the independent market of cryptocurrencies. For this, Gensler stated that they want exchange platforms and crypto projects to approach the SEC. He also alleged that the possibility of any exchange platform having zero securities is very remote. He said, "To the extent that there are securities on these trading platforms, under our laws they have to register with the Commission unless they qualify for an exemption." Gensler claims to be technology neutral. He stated that technologies don't last long if they stay outside of the regulatory framework. The SEC's intent is clear at this point. He wants the regulatory authorities to establish oversight over the crypto market, claiming that this is to guarantee the protection of investors. The SEC went after Coinbase, and has now launched an investigation against Binance, which is the world's largest cryptocurrency exchange. The allegation is that Binance is exploiting customers via insider trades. The world of traditional finance regards new and revolutionary financial tech with contempt. The stage is set for another stock market crash, which is also going to affect the crypto space. The crypto bull run is not over yet. Individual investors need to profit from their crypto holdings during bull run. People lose money waiting for corrections in the market or anticipating corrections than when these corrections actually happen. Note that the investor who makes the best out of a bearish market is the smart one. What a smart investor should do is to identify the best entry points as the crypto they are investing in experiences a downswing. Crypto is notoriously known as an asset class that involves a lot of market risks. But traditional finance is not exempt from market instability. As the acceptance for crypto keeps on growing, in a period of a few years, it is going to be the safest asset class out there. Now let us take a look at the performance of XRP in the market. As of September 25th, at the time of making this video, XRP was worth 94.12 cents. The major support level for Ripple lies at 84 cents. Failure to move up through its pivotal price level in the 94 cents range would result in XRP falling to this support level. XRP should avoid the next major support level at 82 cents to avoid going down a bearish spiral. The next support is at 76 cents. Slicing through the 94 cents range would bring Ripple to its first resistance level at $1. The next challenge will be posed by the resistance lying at the $1.14 mark. Meanwhile, regarding the Ripple SEC lawsuit, it seems that Ripple Labs has no plans to go for a settlement in the lawsuit with the US regulators. Ripple is instead preparing to go for a trial. As per the recent developments, SEC did not give fair notice to Ripple, nor did it clarify the circumstances when they sought guidance. The SEC had earlier filed a motion in which their attorneys stated that there is no realistic prospect that the parties will fully resolve this case for several months, if not longer. Remember this tweet by John E. Deaton? The tweet shares a proclamation on how the SEC considers that purchasers of XRP entered a common enterprise. The following points are discussed in it. Investors who purchased XRP in the offering invested into a common enterprise with other XRP purchasers, as well as with Ripple. Ripple's success or failure in propelling trading of XRP drives demand for XRP, which will dictate investors' profits or losses. The price of XRP rises and falls for XRP investors together and equally for all investors. These are ridiculous observations. These arguments made by the SEC show that they have little footing in the lawsuit that they filed. Attorney Jeremy Hogan had been carefully monitoring the case and providing regular updates on the lawsuit in his YouTube channel Legal Briefs. He says that the lawsuit is favorable for Ripple in any scenario, as the win in the end would definitely be for Ripple. Do you invest in XRP? Let us know in the comments. If you want to continue to know about XRP, we have got 2 more videos waiting for you on the end screen to check out. Make sure to subscribe and give us a thumbs up. Thank you so much for watching. See you in the next video. Before heading forward, kindly note that prices of cryptocurrencies frequently change, so by the time you watch this video, it might have changed to a whole new value. The information provided in this video does not constitute investment advice, financial advice, trading advice, or any other sort of advice, and you should not treat any of the content as such. The content in this video is for educational purposes only and hence should not be considered as financial advice. Do conduct your own due diligence and consult your financial advisor before making any investment decisions.